Are we going to see risk assets sell down if we don't see that 50 basis point cut?
I think we will, Dan. The natural propensity of the stock market these days has been for profit taking, and just eavesdropping on all of the good things that Steve was saying, I think we are building ourselves up for disappointment if it is only 25. So our view is 25, just so you know. Therefore, I think we could see a sizable correction. But if you look back to what happened in July when we had a stock market sell-off of about 9%, earlier this month we went down about 6%. We've come back. The Dow is at a new high last night. So if we do get a sell down, I don't think it'll be very sharp.
Okay, so just talk to me about size and scope of the potential sell down here. Let's just walk through some scenarios because, as you say, the market suggestion is for a 50 basis point cut. You're saying 25 is more likely. How big could the sell down be if the Fed disappoints?
I think 5 to 10% correction in the stock market would be that order of magnitude, which we saw in July. We saw more toward the 10%, and then just over the last few weeks we saw about a 5% correction. But I'd also like to say that 50 basis points is entirely possible, and just to reiterate what you have already been talking about, there have been lots of hints dropped by former Fed officials and mysterious articles that have appeared in various newspapers over the last few days that could just be a coincidence, or they could be setting us up for 50 basis points. And we should remember, too, there is no meeting in October, so the next meeting is November, and therefore cutting by 50 at this meeting this month would really just be like doing 25 and then another 25 in October, if you will.
Okay, so we watch and wait. And Mark, nice hedge, by the way. I see you mentioned 25 being the base case, but hey, you can't rule out 50 as well, so you've got to play both sides. How do you want to be invested around all of this as well? Because it seems as if equity markets have been in somewhat of a muted uptrend, as you've called it. We saw lots of volatility through August, a bit of volatility through September as well, but the broad case here is for higher highs for equity. So how do you want to be trading around this upcoming Fed cut, and what does the market look like moving forward?
I think you do want to be prepared for a pullback. In the absence of that, I also think that things are going to be choppy up until the election. The third quarter earnings, they don't come out for a month, but the revisions have been very substantial. About a month ago, the consensus was looking for 9% earnings growth in the third quarter. That's come down to just 4% now. So we need to get past the third quarter results and then, of course, the election, where, if I recall, in the summer before Biden dropped out, the stock market was going to new highs. It clearly likes Trump, or at least it doesn't fear him. And then since Harris has come to be the nominee for the Democrats, the market has been more range-bound. So I think that it's a little bit more fearful of her. So I do think the primary trend is up. We are in a bull market, but I do think that we also should be expecting some volatility over the next few months.